the important data point that is flashing for you at the bottom of your screen. We had a bunch of macros come by on Friday, which was with regards to India's IIP and CPI. But now we have the WPI inflation. After many months, I believe it's inched into positive territory. Ekta, 0.53 versus 0.2.
Well, yes, absolutely. But the WPI was expected to be 0% this time. It was expected to actually soften on a month-on-month basis from that 0.2% to around 0%. And in fact, it's come in higher or harder on a month-on-month basis. It's hardened. So 0.53% as compared to around 0.2%. But it's largely in line with our poll of around 0.6%. But there were some expectations that there could be a 0% figure which could come in for the WPI. Now, core WPI, let's see what that delivers, because it has been in deflation mode. So whether or not that kind of deflation would be to the extent that we've seen in the month of Feb. Remember that the CRB commodity index was up around 5.5% on a month-on-month basis in March, which was led primarily by energy prices. So what we're probably going to see henceforth is going to be the impact of energy prices on the WPI. But as of now, 0.53% versus our expectations of 0.6% versus some expectations of a softening, and versus 0.2% on a month-on-month basis. Remember that we did have the CPI data which came in on Friday, and that had moderated to 4.85%. It was a sub 5% figure. So maybe that there was expectations based on that maybe there could be an WPI softening.
We do have some more details as well. Food inflation, WPI food inflation is 4.65%. This compares with 4.09% in Feb. Manufactured products have actually seen a bit of a decline, minus 0.85% versus minus 1.27%. And we do have, the vegetable price index, which is up 5% on the month. Manufactured products, 0.2% on the month. Cereals up 0.4%. Nothing really in terms of move out there. But the outliers are food, and which is actually led by vegetable price index, which is up 5.1%. You did speak about energy. Well, fuel and power inflation has actually been a negative 0.77% versus minus 1.59%. So maybe this increase would be visible in the future ones, in the April month, etc. as well. So as of now, the details that we have, 0.53% for March WPI. This compares with the street expectation of 0.6%. And on the month, it is from 0.2% to 0.53%. We do have Suvodeep Rakshit, who is the senior economist, Kotak Institutional Equities, joining in. With the numbers that we have, Suvodeep, what do you make of the WPI for the month of March?
Pretty benign set of numbers. And it has been continuing for a fairly long time now, obviously led by the manufacturing product. So if you look at chemicals, if you look at basic metals, they have been on the lower side. And that is what is pulling down WPI and keeping it sub 1%. But I don't think that is going to continue. But at least for the March print, I think the manufactured products remain on the lower side. As you correctly pointed out, the food part obviously is on the higher side. We've seen that in CPI. We are seeing that in WPI. And I think that trend is most likely going to continue. But WPI on the whole remains benign.
Okay, well, WPI remains benign on the whole, but we do have commodity prices which are higher, metal prices which have risen. We have oil which is on the boil and geopolitical tensions to reckon with. At current status, what do you think the trajectory of WPI would be based on the current scenario of rising metal prices, commodity prices, oil?
Anyways, if we did not take into account the recent increases that we've seen in crude, etc., metal prices, the WPI inflation just on the base would have increased, and it would have increased back to around, let's say, 3.5%, 4%. But with crude prices increasing, obviously it has an effect on WPI, not as much on CPI per se, unless the fuel prices are changed. But WPI, there is an impact that we will see on the fuel prices. Metal prices increasing would have an impact on the manufactured products as a whole. And that trajectory will now, as in WPI, let's say over the next 1 year, will continue to increase. That's what we expect. And that should increase to roughly around 4% by the end of the year. And that's broadly the trajectory that we are building in.
Okay, so you expect WPI to probably harden to around 4% by the end of the year. March WPI core deflation. It's continues to be in deflation category,
Yeah.
territory rather. It's at around a deflation of 1.2% as compared to 1.3% on a month-on-month basis. So that continues. That's an additional piece of information coming through. Well, Suvodeep, on the whole, what is your expectation now from CPI as well, considering that we are now working with a new scenario? And based on that, what is your expectation on whether we can see a sub 4% CPI inflation target through the year, and the expectations from the RBI as well?
Sure. If you look at the CPI, most of the weight comes from the food products, and the food products are not coming down as fast as one would expect. There's obviously a lot of headwinds in terms of food prices coming off, especially if you look at the kind of weather patterns that we have. We will have the IMD giving a forecast for the monsoon today. But overall, again, temporal and the spatial distribution matters a lot more in terms of how the monsoon pans out and what the impact on the food prices are. So that kind of remains a bit of the whole food prices remains in flux. And barring that, if you look at the kind of trajectory, there will be a sharp drop sometime around June, July, where there's a very favorable base effect that will push down inflation to around 3% or maybe sub 3%. But that's not a durable point that we see. What we see over, let's say, if you were to look at FY25, the average would be somewhere around 4.5%. Now, what does it mean for the RBI? For the RBI, the target is 4%. Obviously, given where we are in terms of growth, etc., the target for 4% remains, the RBI has been highlighting it. And we do not see a durable move towards a 4% anytime soon, which means that a pivot that we all, markets are expecting sometime in second quarter, third quarter, sometime around that. I think for us, we think that the RBI gets into a position to cut rates not before the third quarter of FY25, somewhere in the October or the December policy. That also assumes, in some sense, as per our estimates, that the inflation goes towards the 4% by first quarter or second quarter of FY26. So that's the kind of trajectory we are looking at the inflation. And hence, we think that the RBI will want to delay the rate cuts as much as possible to kind of anchor the inflation trajectory durably to the 4%.
Perhaps rate cuts ruled out for the next 3 RBI policy meetings itself. Suvodeep, I just wanted your thoughts on global interest rates as well, now that we have you with us, because RBI is also at some point, fixing itself with what the US Fed is doing. And out there too, inflation remains sticky. There are elections in the US as well. There are elections in India. Typically in election year, fiscal policy is looser than monetary policy. And at the same time, we have the new geopolitical tensions which may keep inflation on the boil. So would you assume that rates are going to stay higher for longer, even in the US? When is the first rate cut that you're expecting out there, if at all?
So US, for sure, if you look at the growth impulse as well as the fiscal impulse, they are on the higher side. Labor market data is on the higher side. The inflation numbers, I think, it's good to summarize it by saying that, the last mile of disinflation is clearly not very easy. And if you look at the credibility of most of the global central banks, that has been achieved after a lot of, putting a lot of effort. And they don't want to squander it away anytime soon. So they will wait it out as long as possible, till the time there are clear signs that growth will be is an issue, or durably inflation is coming off as per, or closer to their targets. Till that time, I think it's very difficult for most of these central banks to kind of announce that they are ready to pivot, which means that, as the market is now pricing in, that rate cuts are not there till probably September for the Fed. And I think that's a very true assessment in some sense, given where we are in terms of the growth inflation mix, the fiscal policy, etc. I think it's for almost all central banks, it's now a wait and watch policy as long as possible. Rate cuts will happen if you see signs in terms of growth impulses weakening or inflation durably coming off towards the target. So I think that wait and watch continues for almost all central banks.
Okay, all right. We're going to leave it on that note. Pleasure talking to you. Thanks very much for joining in and speaking with us. So that's the update coming in on the WPI inflation data for the month of March, which is hardened on the headline at around 0.5% as compared to 0.2% on a month-on-month basis. And we have the core WPI, however, which continues to be in deflation territory, but is lesser as compared to the previous month. We need to take a short break. But up next, we'll get you more on the markets and a lot of stocks in focus today. So more on that once we're back.